All right, maybe you have a really good trading strategy, you have really good parameters, and you pretty much know what you're doing. But there's still one missing piece. After you've gone over all the parameters and you're ready to take that execution, take a step back and think, are there any invalidating factors that would prevent me from taking this trade? What are invalidating factors? Those are basically signs that, oh, hey, even though this trade looks good, it's probably likely not to work out. Now, I bet you half the times that you're losing, one, it's because you didn't check that there's an invalidating factor. Two, sometimes everything could be right and you still lose. That's just the market. But it's about minimizing your losses. And this becomes even more true when there are multiple invalidating factors, even if the trade looks really good. So yes, let me walk you through an example. Okay, so when I trade, I typically use what's called the 22 model. All right, if you don't know what that is, it's basically when you have a high like this, it gets broken, right? So that this high gets swept, that liquidity gets swept there, and then you have a breakup market structure with a fair value gap, price returns back to that fair value gap, and then it drops from there. Now, as you can see, we have a pretty clear 22 model right here. You have this old high that gets swept by this high, breakup market structure below this low with a fair value gap. Turn back to that to run where? To this relatively equal lows here that is indicated by this yellow line. I can show you where that is. Basically, that yellow line goes to these relative equal lows over here that I'm targeting. Now, as you can see, we eventually go to where I want to head for, right? As you can see, we eventually head to where I was targeting. So my direction was right, but my execution was poor. And why was that? Even though the trade looks good, there may be factors that invalidate this being the right time to enter. And I'll give you a couple. Keep in mind, this becomes even more pertinent when there's at least 2 or 3 invalidating factors. You should definitely not be taking that trade. One, we've already moved a lot. Since 8:30 a.m., we've literally dropped 420 points. So we're in a very deep discount. It would be unreasonable to assume that we shouldn't get a short-term, pretty reasonable retracement before we can actually head lower. So on a trade like this, I would rather wait until price runs up, has some pretty more obvious manipulation, and then we can drop again. 2, you can see that we actually wicked below this low, purged that low, and closed above it. That is a clear reversal sign. When the bodies of this candle right here does not close below this low, instead it wicks it and comes back up, especially when you're in a discount, this will likely lead to that being a loss. Number 3, there was also SMT with ES at these lows. So this also was another promoting factor as to why I definitely should not have taken this trade. So why did I take that trade? One is because it looked good to me and it met all of my parameters on my checklist, but I didn't validate it with these other factors that provide the context as to why, even though my strategy looks good, this particular trade is not one to enter. Number 2, you're making these decisions in literally under 60 seconds. And if you don't have a lot of experience, that can be very difficult to do. And that's why over time, you need to just continue to study every trade that you take, every decision that you're making throughout the week for every single trade that you're logging. And over time, it'll become much easier for you to make these decisions very quickly.